Welcome. This is LSBF TV. We're here to look at task 2 of MDCL. That's Management, Accounting, Decision and Control. What we intend to do here is to look at the fun associated with variances and more variances. My name is Rob, and over the next half hour we're going to have the joy of looking at how you deal with this specific assessment task. Now, when we look at task 2, as you would see it in your assessment, your exam assessment, what we will notice is that if you can do your variances, you can do this task. There is no difficulty whatsoever. So what we have to do is to go straight in and look at the fun. So what sort of thing may be asked? Well, it's all about variance preparation. Nothing more and nothing less. And what I'll be asking you is for your answers to questions in a moment. So please, you be ready to help me to do what we have to do. On the one hand, we've got the joy of looking at variable cost variances. And this should be very straightforward, at least I hope it is. It's the bread and butter of what you have learnt, not just in this unit, but also going back to things that you've looked at level 2 and even to a small extent, level 1. We also have the joy of looking at fixed overhead variances. And of course, that is a little bit more challenging. Now, an interesting aspect of the variable cost variances is that first of all we have to prepare them, and of course we have to prepare the fixed overheads as well. But what we have to remember is not only do we have that, but we also have backwards variances, i.e. the idea that we are given the variances and we have to work backwards to go and establish either an actual value or a standard value, whatever the examiner wants us to do. So, before we go anywhere, what we're going to see is that this particular assessment task, the suggested one by the AAT, focuses solely on variable costs. So should we go back and just remind ourselves of how we calculate variances? This shouldn't be a difficult thing. It should be something that, as I said before, you have done many times before. But we want a skill that allows us to do it accurately and quickly each and every time. So if we were to look at our variable cost variances, there are many different ways of doing this, but having taught them for many years, I know it doesn't look it, I've come up with a technique that I think is by far the most appropriate to do things with, regardless of the information that you're given by the examiner. So let's start by looking at materials. And if we're looking at materials, what I do is I use a simple pro forma that we slowly fill in. Okay, I say slowly, maybe you can do it a bit more quickly than I can. So we have our standard quantity at standard price. This is what we expected everything to cost. Now, of course, because we're looking at variable cost variances, we want to look at this at the actual output, because we will have to, do you remember that idea? Flex to the actual level of activity in order that we're comparing like with like. And we're going to compare that to the actual quantity at standard price, and we're going to compare that to the actual quantity at actual price. So, highly descriptive here to make sure that we do pick the appropriate bits and pieces when we need them. Now, just looking at that pro forma, I think we can quite quickly see that if we contrast the top two values, the price remains the same, and the only thing that differs is the quantity. So what we end up with is a quantity variance. But what do we call that variance? Yes, typically we call it a usage variance. So whether we used more or less units than we expected to use, something like that. And then of course, if we compare the bottom two, the quantities remain the same. So the only thing that differs is the price. Simple as that. So that's all we will have to fill in. Nothing more, nothing less. Now, whilst we are here, I suppose it makes sense for us to also look at labour. And if we were to look at labour, we're going to do exactly the same sort of thing because it's, again, a variable cost. But we don't talk about the quantity of labour. If you were to measure me in kilos, I may not be the most impressed. And we don't talk about the price of labour. Instead, what we talk about would be the standard hours at the standard rate, the actual hours at the standard rate, and the actual hours at the actual rate. So in essence, we're doing exactly the same thing. Okay, nothing changes, exactly the same thing. The only difference is the terminology. Instead of usage, we talk about efficiency. And instead of price, we talk about rate. But otherwise, it is one and the same. No difficulty there whatsoever, I hope. Now, one final thing is I would say that you can use precisely the same pro forma in terms of your variable overheads. So I would use whatever's in red there, standard hours, standard rate, down to actual hours, actual rate, no problem with that. That remains the same. The only thing that would differ is that we don't tend to call it a rate variance. What we tend to call it is some sort of an expenditure variance. It's not wrong to call it a rate variance, but it's just not the way we describe it. So, in terms of variable cost variances, that is all that you need to know. So, let's go back and look at the task that was actually set for you to do. This was set by the AAT, and with any task that you have, especially at level 4, where some of the questions can go on forever, you must start by looking at the requirement. What is it that the examiner wants us to do? So in part A, we've got to calculate the variances in the table below, enter your answers to the nearest whole pound, enter a 0 if there is no variance. Do not use minus signs or brackets. Of course, you wouldn't do that because you are going to label them as adverse or favourable. And I'm sorry, I've just got ahead of myself. Part 2, tick the correct box to indicate whether each variance you calculate in one is adverse, favourable, or there is no variance. So pretty straightforward stuff. I'm hoping this is something that you are very well prepared for. This is something that you can just do. If you can't, you better make sure that you can just do it when it comes to the exam proper. So now let's look at the information above and see the sort of information that we're given, because this may be slightly confusing to you. What we're given is we're given budget and actual. Now, what we want really are the standards, and they're not there. So what we're going to have to do is to play with the information to get it in such a manner that we can easily use it. Okay? So my first question to you is, what's the difference between standard and budget? Any thoughts on that? What's the difference between standard and budget? Well, I am going to tell you the difference is that the budget is in total. As we see here, we're given the budgeted or expected production, 5,000, the budgeted kilos used, 50,000, and so on, in total terms. And what we want is we want all of this per unit in order to give us the standards. So I'm actually going to do this little working now in order that I've got all of the information that I will need before I need it. So moving on, how many kilos do we need per carton? I'm thinking we can simply look at the distinction between the number of cartons that we expect to produce, the output, and the kilos of apricots, the input. And couldn't we say here that the standard usage is going to be 10 kilos? Is everyone happy with that idea? 10 kilos. For every unit that we produce, we will need 10 kilos. Okay? And then we need the standard price. Now, if we look at the distinction between the kilos budgeted and the value of those kilos of apricots of all things budgeted, if we divide 25,000 by 50,000, couldn't we say that each kilo of apricots we are expecting to cost us 50 pence per kilo? Something like that? So we've got the information for our materials there, and I don't think that that was too difficult. Now let's look at labour. Now again, we're going to look at the link between the output, the 5,000 cartons, and the hours. And what we're seeing, 1,000 divided by 5,000, that we need something like 0.2 hours per unit of output, something like that. And then, of course, we have the joy of looking at the rate per hour. And what we can see here is that for 1,000 hours, we are expecting to incur £10,000 worth of cost. So therefore, what we see is that the rate per hour is £10. And there we have the standard usage, the standard price, the standard hours, and the standard rate. All of those basic building blocks that we will need to prepare the variances. So I'm hoping that this is something, as I said before, that you can just do, because it is a base skill that you're expected to be able to do. Now, obviously we want to slot our variances into the boxes below, but it probably makes sense for us to go away and to prepare a separate working. You could, of course, do this on the face if you wish, but just so it's easy for everybody to see, let's go for our materials. Standard quantity, standard price. Actual quantity, standard price. Actual quantity, actual price. Compare the first two, and that gives us the usage variance. Compare the latter two, and that gives us the price variance. Very straightforward indeed. My first question to you is, what is the standard usage? And if you can remember from at least 2 minutes ago that we expected to use 10 kilos per unit, you're well on your way to success, health, wealth, and happiness. Now, I wonder if you remember what I said before. We were talking about variable cost variances. The whole point is that we expect variable costs to vary with production. So the only thing we have to remember with this pro forma is that when we're looking at the standard quantity, we want it for the actual level of output to compare like with like. So looking back at the information in the question, you see that the actual production was 6,000 cartons. So all we're saying is, given that we produce 6,000 cartons, we expect to use, what's that, 60,000 kilos. And we multiply by the standard price, and we said that the standard price was 50 pence. So if we were looking at standard quantity, standard price, sorry, I've been slightly clumsy here in the way I've laid things out. If we're looking at standard quantity, standard price, I believe that that comes to £30,000. Now we just work down actual quantity, standard price. Now, how many kilos did we actually use? If we look back at the information, the actual kilos used was 70,000. Is everyone happy where that number comes from? It comes from the actual data in the box that we were given above. We multiply that by the standard price of 50 pence, and that gives us 35,000. And then finally, we want the actual quantity, actual price. Now, the great thing here is that we've got the actual of the actual quantity at the actual price gives us the total actual cost. So again, look to the right-hand column in the actuals, and we see that the total actual cost of apricots was 36,000. So we've established all of the values. So how do we determine whether the variance is good or bad? You see, when we compare the standard quantity standard price to the actual quantity standard price, we see that there is a difference of 5,000. So is that adverse or favourable? Well, the thing to remember here is that we're looking at a cost variance. And because we're looking at a cost variance, we would rather that the cost was lower than it was higher. And what we're seeing here is that the actual quantity used is actually higher than that which we expected, which presumably is a bad thing. Now, that's all well and good. There's nothing wrong with what I've said there. That's all fine. But we want a very simple way of doing this. And all I'm going to say is top minus bottom. 30 minus 35,000, it's minus 5,000. Minus is bad, we call that adverse. Simple as that. Okay? So there is of course a logic as to why, but in the exam, top minus bottom will bang out the answer more quickly than otherwise. Then we compare actual quantity standard price to the actual quantity actual price. Top minus bottom, we've got 1,000. And again, it's adverse because it's negative. So this is not difficult stuff. We can do it, which is the key. If we do precisely the same for labour, we've got standard hours, standard rate, actual hours, standard rate, and actual hours, actual rate. Compare the top two and we get the efficiency variance. Compare the bottom two and we get the rate variance. Okay, so not difficult. And we're going to do precisely what we argued before. The standard hours, we expected to use 0.2 hours of the actual output. And if you remember, we said that the actual output was 6,000. Look back at the box if you wish. We multiply by the standard rate, and that's 10. And what we end up with here is 12,000. So we're saying that we expected to incur £12,000 worth of costs given that we produced 6,000 units. Actual hours, well, we go back to the box of data and the actual hours worked were 800. 800 multiplied by 10 that means that the actual hours at standard rate will come to 8,000. And finally, the actual hours at actual rate, well, strangely enough, we see that the actual hours at actual rate, the total actual cost was also 8,000. So we've got the values, we bash them into our pro forma. Now you may think that writing out the pro forma is a foolish idea. But let me tell you, you've got loads of time in the exam to make sure you do things correctly. And the issue in AAT is that you're expected to get everything right. And on that basis, take your time to make sure that you do it properly. So, top minus bottom, we've got 4,000 £4,000 positive, that means it's favourable. And top minus bottom, wow, that comes to nil. So in terms of doing this element of the task, this is not going to be difficult. This is something that we can do. This is something that we expect to be able to do and to get right each and every time. So let's slot this back into the pro forma that we were given. Now just make sure you get them the right way around because they're slightly juxtaposed to the way that we have prepared them. So if you remember, we had a price variance of 1,000, and I believe that that was adverse. We have a usage variance of 5,000, and again, I believe that was adverse. Rate. Now, rate was the one that was nil, and I believe that we just call that no variance. And direct labour efficiency variance, we said that was 4,000, and we said that was favourable. Now, think about it. In your assessment, we've just banged out 11 marks. That's not bad, huh? 11 marks for doing something that we can do. But there's more. So, let's see what else we have here. Now, I said to you that when we look at variable cost variances, the examiner can do it both ways. He can either say, calculate the variance based on the base information that you've got, or the examiner can flip it and say, well, let's give you the variance and tell you to calculate something else. So what are we asked to do here? Calculate the actual number of hours used to produce 950 units to the nearest whole number. Okay. Well, the way I go about this is precisely the way I go about the previous calculation. So we're talking here about labour. And so if that's the case, let's start with our labour pro forma. Our labour pro forma is standard hours standard rate, actual hours standard rate, and actual hours actual rate. And what we want to say is, well, okay, this is the efficiency variance, and this is the rate variance. Bang, 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 bang. So all we have to do is to find the missing number. So looking back, let's just go back and work out what information has been given to us. So we are told here that we budget 2 hours of labour at a cost of £18 per hour. So that sounds a bit like the standards to you and me. Yes, so we've got the standard efficiency and the standard rate. We've also got the actual output here, and we've got the labour efficiency, 180. So all we want to do is to slot that information in to the working that we've already prepared. So, standard hours. Now, I seem to remember we said that we've got 2 standard hours. And standard hours is short for, do you remember? Standard hours is short for the actual output, and we were given that as 950. Yeah? Do we have the standard rate? Well, yes, we do. I think the standard rate was 18, wasn't it? Yeah. So we've got those pieces of information. What else do we know? Well, if you remember, we were told the efficiency variance was 180. 180 adverse. And what were we trying to calculate? Well, I think we were trying to calculate the actual hours. Yeah? So I've given you the full pro forma here, but we don't seem to need the rate information. We didn't have to do that, but I had that ready just in case it was required. So multiplying across the top. If we multiply across the top, we get something like a 34,200. 34,200? And if the variance is adverse, what does that mean? Well, it means that the bottom must be bigger than the top. So we add the adverse variance, and that gives us 34,380. Oh, and remember, we know the standard rate. The standard rate is the same above and below at 18. So to calculate the actual hours, we're simply going to work backwards and say, well, hold on a moment. We've got 34,380. divided by 18, and it comes to something like 1910, 1900 as our actual hours. So that wasn't too difficult. So let's slot that one in before we forget. Ooh, I'm going the wrong way. There we go. We said that the actual hours were 1910. Okay. One more to do. The actual price per kilo. So, maybe to make it easier, what we want to do is to look at the actual price per kilo. So what have we got here? We've got standard quantity, standard price, actual quantity, standard price, actual quantity, actual price. And we'll put it on the face of it to make life easier for you. We compare the top two, we've got the usage variance. We compare the bottom two, we've got the price variance. So what information do we have? We've got the standard quantity of 1.25. We've got the standard price of 7.8. And we're told that we produced 1140. Pardon me, we didn't produce 1140, you stupid boy. 950 units. The actual quantity standard price, we're told that the last month we used 1140 kilos at 780. And what we want to do is to establish the actual price per kilo. If you work through the numbers, you will get to an actual price of 860. So I hope you have found this entertaining. When we look at variances, it is a must-do for you to make sure that you are successful. By doing this, you would have scored 15 marks out of the total marks that you need. Practice, make sure you can do it. Good luck.